The following segment is sponsored by North Star Financial and Retirement Planning.
Have you ever wondered how much of the wealth you have built up for retirement will be lost to the expense of income taxes? And does your retirement planning include being in a lower tax bracket? Well, joining us now are George Fossing and Zach Jenkins. George is an advisor, a fiduciary, and the president of North Star Financial. Zach is also advisor and fiduciary with the North Star team. North Star Financial and Retirement Planning is a local area firm that focuses on preparing people for a successful retirement. George and Zach are also popular radio show hosts, and they are joining us now. Good morning to you both.
Good morning, Margaret.
First, everybody's ears perked up at that lower tax bracket. So tell us, how is that possible?
Well, it takes a little bit of planning, a little bit of rolling up the sleeves, and a little bit of education, which is really about going out there and saying, listen, we believe taxes are going to go up. Is there anything we can do about that? You can always do the Google search thing and probably, talk yourself into a corner. But what we do is we sit down with folks and show them the methodology behind that and getting people to a better place, being a lot more tax efficient. One of our mantras is getting our clients as close to the 0% tax bracket as possible. It's a big deal, and it's very rewarding.
And you're saying it is actually possible to receive retirement income from our nest egg without paying income taxes?
Oh, heck yeah. It takes planning. It usually takes time. But for an example, a real life example, I've been working with a client for a number of years. He's getting ready to retire, and you hear this, he's got $90,000 a year of lifetime income coming in that's 100% tax-free. Yeah, I say that again, 100% tax-free. His Social Security won't be taxed. He's just in a really good place. Doesn't matter what's going to happen to the tax code, tax rates. He's going to be fine, and something we've been working towards for many years, but that's a great illustration.
Wow, well, that's incredible then. Talk to us about why most people don't know about this, or maybe why more people are not taking advantage of it.
Well, we talked about this last week, the difference in tax preparing and tax planning. A lot of folks, there's some out there that do their own taxes, some, use a professional, but most accountants and CPAs, they're doing your taxes for that year. And I'm saying most, some of them are going to be forward thinking, but most of them are just looking at that year. They're not looking 10 or 20 years out down the road to, see if there are any implications to, what advice they may be given at the current time.
Okay, well, people would think that taxes would be the same whether we paid them now or paid them later, but that's not true.
Well, they could be, maybe. Currently the way that the law is written, it's tax rates are set to revert back to where they were in 2017. They're set to go back after 2025.
Which is up, by the way.
Which is up. So that leaves a window maybe for people to do some planning. But you know how politicians are, they tend to change their mind sometime with a stroke of a pen. They can, the next day you wake up and the rules are changed. Yeah.
So all we can do is really have good plans in place. Talk to us about the benefits of tax optimization planning.
One thing we do, people are sometimes wonder what exactly we do. We do retirement planning. What does that encompass? Well, basically, you automatically think investments, right? Which is a big deal. That's what we do. But also, the Medicare aspect of it, the tax planning aspect of it, the healthcare, things like this, Social Security planning. Zach's got our expert here in the office with Social Security planning. So it all comes together. Why does that matter? Well, your Medicare, which is your healthcare retirement, could quadruple if you have too much income coming in that's taxable. Your Social Security, up to 85% of your Social Security can be taxed as well. So it's all meshed in together. If you want to retire younger than 65, and you need private insurance, there's a right way and a wrong way. The difference between paying $100 a month and $1,500 a month by being tax efficient. So this is not our grandparents' or parents' retirement anymore. It's gotten a lot more sophisticated, and if you're not aware, it can be very costly. And if you are aware, there's a high degree of efficiency with it.
Right. Well, I know this level of planning makes a huge difference for your clients. Talk to us about the types of results that they've been seeing.
Ian, I wish we could have a couple right here, right now. They're sleeping better at night. They're not concerned about their retirement, and they're concerned about getting back to traveling and seeing their grandkids and such. It really, it's the old thing. You teach your kids hard work pays off, right? Sitting on your hands does not. Sooner or later, it catches up with you. Laziness. So you're going out there and being proactive and taking, a couple of hours out of your life could make a big difference. And the folks that we've been able to work with, we've been graced by goodness there that, they're in a better place, just in a lot of different levels too, especially if you're married. It's a big difference between planning and not planning.
I just think for everybody trying to navigate this right now, it's really reassuring that they can talk to you two. So thanks so much for being here, George and Zach.
Thanks again, Margaret. Appreciate you having us.
Absolutely. And for those of you at home, if you're currently retired or getting close to retirement and you'd like to learn more about how to help protect and grow your hard-earned savings and investments, North Star Financial has a great offer for you. Right now until June 29th, they're offering a complimentary no-obligation investment portfolio review. The report will include potential tax savings opportunities and ways to reduce the effects of market volatility on your portfolio. Their team will schedule a phone call, video call, or future in-office meetings so they can speak with you personally and provide you with a roadmap going forward. The number to call now, 309-8146.